Good morning, everybody. Mike Tedeschi, investment strategist over at Perspective Wealth Planning. In this week's video, we're going to be taking a look at a number of individual indices. We're going to start with the major four as normal, but then we are going to take a look at the New York Composite. We'll take a look at the NASDAQ Bank Index. We'll take a look at the Oil Services Index. We'll take a look at housing, gold bugs, global agriculture, utilities, and we're also going to talk a little bit about the 10-year Treasury and bonds. So a lot to cover in today's video. Let's jump right into it. First and foremost, S&P 500. We talked about this last week, and we zoom in here. This is the range that we are paying attention to. We have not left it. We have not left this range since the beginning of this month. So we have spent the entire month inside of this range, still waiting for this to resolve. A breakout here to the upside back over that 50-day moving average, and that major important 2950 level certainly puts us back on track to get those new all-time highs, if not push higher. A breakdown below them, the levels that we spoke about last week being about that 2700 level, the important 2600 level, which played out multiple times last year, and that's where we got that major breakdown at the end of the year. And then below that, that 23 50 level, which was the lows from last year. So that's what we're looking at. Not a whole lot has changed this week. A lot of volatility, right? Big sells to the downside, big moves back to the upside, but still at the end of the day, trapped inside that range. All right, let's start here by taking a look at the New York Composite Index. So this is everything on the New York Stock Exchange. Encompasses a ton of securities. So I like to look at this for the health of the entire market. One thing that we will note here is we had that breakout at the beginning of 2018. And then once we fell back underneath of it during that sell-off in the beginning of the year, we never got back up to those levels. So as a whole, we have not tested those highs, and we have had that very split market, and we've talked about it a lot, where you've got something like the NASDAQ, which continued to make new highs here even into last month, versus something like the Russell, which is nowhere near putting in those new highs, still way off of it, and actually earlier this week looked like it might leave the bottom of that range and actually confirm this kind of head and shoulders top. It was saved right at that last level. So when we look at the market as a whole, it's no surprise that we have not pushed back up to where we were in the beginning of 2018, just as we take a look at the individual indexes and the bifurcation that we subsequently have had really since the end of last year. Now, we failed right at that major important level. We talked about this, getting back up over that 13,200 level, which was, the highs put in at the end of last September, a month or two ago, really would have given us that credence that everything is kind of pushing higher together. And we did not see that happen. We fell right back down. And if we look at the important levels here, we've got that 12,300 level, and really at the upper end of that range, we've got that 12,850 level. So it is kind of trading inside of here. Now, the difference between this and the S&P 500, look what we subsequently have put in. Now, obviously, today's candle is not finished, but we have put in a series of lower highs so far. If this does turn back down from right here, that would say a series of lower highs, and this would actually be a descending flag in a potential downtrend, which, again, we have to watch for the bottom of this range essentially to break. But this is not the greatest look, whereas when we take a look at the S&P 500, right, we've bounced back up essentially right into that same level each time. We have not made lower highs. So far to speak there. Now, let's take a quick look at breadth. We like to take a look at the NASDAQ McClellan Summation Index, right? Last week we had a crossover here to the upside, and then we had a crossover to the downside. Now it looks like we're trying to cross back up to the upside. What is this saying? This is saying we're not getting a whole lot of change. This is still below that zero line, but if we were to just, use technical analysis on that, we basically have a level from June, right? And that's essentially right where we're at right here. So it's kind of that support zone. We continue to watch the NASDAQ McClellan Summation Index for that breadth reading, but it, just like what we have seen with the indexes themselves, really hasn't done anything over the last couple of weeks to give us any indication one way or the other. Right, we're trapped inside this range until we leave it, and basically we need to continue to pay very close attention. So I wanted to jump in and take a look at a number of areas of the market that we haven't talked about here in quite some time. Let's first and foremost, let's take a look in at bank. This is the NASDAQ Bank Index. You can see last time that we really dove into this here in this video was at the end of April, beginning of May. And let's continue these lines out. We had put this in as that resistance zone from where we had the breakdown last year. And when we take a look at it like this, what do we have? We have a series of lower highs, right? So we have kind of that downtrend that's there, and we actually do have not a series of lower lows, but we do have lower lows that have been made. So these two obviously are lower, but the original bottom there at the beginning of this year in March, we bottomed a little bit higher in May. So overall, kind of a sloppy, but you can see this is not the greatest looking chart here for the bulls at all. We have a downward channel here over the last month. So whereas again the S&P 500 is trading in a straight range, this has been making lower highs and lower lows on a shorter time frame. This is something we definitely have to pay attention to. We're not that far off of those December lows. Now, the weakest area of the market this year has been energy. And when we take a look at the oil services sector, this clearly took out last December's lows and has continued to make lower lows as the year has gone on. Oil and energy have been under tremendous pressure here this year. And in fact, a lot of the big oil companies at this point in time have extremely high yields, which may put a floor on the selling. But when we look at this technically, I mean, this is just a mess. This is not an area of the market that looks good at this point in time. A lot of action would need to occur for this area to really start getting attractive again. Mainly, we need to get up back above those December low levels, and then if you were to have something like we pushed back up here and kind of back tested, that would give you a potential bottom that would be actionable. But there's nothing to say that that is what is going to happen. We're still underneath the declining 10, 20, 50-day moving average, and of course if we throw the 200-day moving average on here, we're nowhere near. We're way underneath the 200-day moving average. So really, the bullish idea behind this is we're so oversold, we're due for a bounce. But this is not an area that I would be interested in at the moment. Want to pay close attention to it. It is a large sector in the economy, and it clearly did not do what the rest of the market did this year. Red for the year, where the S&P still at this point in time is up 13-14% in that range. Next, let's jump in and let's take a look at housing. This is another area that is important, and we are at a very important level, I think, on this chart. If we go back, this zone right in here is really where we've got that resistance from that sell-off at the beginning of 2018, right? We clearly broke above that level. We used it as support. We pushed up. We broke underneath, and then it acted as resistance. So it's still resistance until it gets back up over this level. We're not that far off of it. And there's a lot of little resistance points, right basically here from the highs that were put in March and in April. But really the way that I'm looking at this chart, and just to make it as easy as possible, you got to get back up over that 335 level. If you do, that's really good for the economy. That would be a very positive sign. You do have a potential ascending triangle pattern. You have put in higher lows all year long. Higher low, higher low, higher low, higher low. So this could be looked at as pretty bullish. We don't have just a total flat top. We do have a kind of a channel where we have made higher highs in here. So the bearish case on this, if you're taking a look at it, would be we've got resistance right here, and this could potentially be a bearish rising wedge, right? The confirmation on that would be a break below that 309 level, and the bulls really win this battle, in my opinion, if they get back up over the 335 level. But this is an important area of the economy, and it's one we should continue to pay attention to. Now let's take a look at global agriculture. this is all the way back down near those December lows. So here we are facing that major potential support zone. And if we back this chart up, and let's look at this in on a weekly time frame, let's extend these areas out to the left, you'll notice that there is a ton of price action going all the way back in this zone here back in 2015. So this is an important level. If you break underneath of that, there really isn't a ton of support until we get back over here. This, of course, very much affected by the heightened tariffs and trade war, essentially, that's going on. And this is an area that we should be paying attention to. If we do hold here, if we do get some respite from the tariff news, this would be an area where we could see that a legitimate bounce get put in. Now, let's pay attention to utilities, right? We have talked about this a lot. Here's the Philadelphia Utility Index. Look at this chart, right? Breakout at the beginning of the year, right? Even the sell-off at the end of last year, right, where the rest of the market is making new lows, it was putting in a higher low for the year. So it has made a series of higher lows, a legitimate breakout over that 720 level. It's held above that and it's continued to push. Right, we've seen weakness here over the last couple of weeks with the trade war escalating, and if we look at this chart, it has just continued to push higher. Right, the market is seeking that safety, and that's something that we have been talking about. We've seen high yield plays, utilities being in that space, as acting really well here as of late, as people are rotating out of higher risk and into safer yielding plays. You have that flight to safety, which has been one of the concerns that I have had. I've mentioned it a number of times this year, but here we are. This thing's still continuing to push higher while the market itself is not acting well. So that is, definitely a little bit of a red flag there. I want to take a look at, TXN. It's TNX. I put them in backwards. We want to take a look here at the 10-year Treasury Index, and we have continued to push lower and lower and lower on this, and this puts us back really into the same kind of low zone that we had in 2012 and in 2016. Bonds yields have continued to drop dramatically with the rate cut, and bonds themselves, because they act as inverse of actual interest rates, have had a very strong year. Depending on what you look at, if you look at the 20-year bonds index, it's outperforming the market this year. It's up 21%. It is the same kind of up percent as gold is. So both of those have actually outperformed the stock market at this point in time. So that's just another component where we can take a look at this and go, there is definitely a little bit of concern. We've got bonds, we've got gold, we've got utilities outperforming, and that, of course, is that flight to safety. A lot of that has to do with news, and that could essentially abate if there is an agreement that gets reached. But if we don't, we're going to continue to have that overhang on the market, and that's a problem. Last thing we were going to take a look at real quick, and we just kind of discussed it, was the Gold Bugs Index. You can see a nice move higher here over the last couple of months. Really, you had a very tight trading range over the last couple of years with an explosive move here over the last few months. There is overhead resistance on this index right here at that 285 level, and really up at that 400 zone. So this is where we really want to pay attention here over the next couple of months. One of the other things with this, if we get up into this zone, we will probably have RSI be at that overbought condition, which, remember, it can stay overbought for quite some time. A good example of that would be, guess what? It got overbought here on a monthly time frame right here and continued up another 80% over the course of that year. So, that might be an area where we have some short-term resistance. We'll have to pay attention when we get over there. I appreciate you guys taking the time to listen to this video. Hopefully everything you found value in it. As always, I will see you guys next week.